Public sector, Bob, we've talked about mining, we've talked about retail. Public is a different beast. Your thoughts and comments.
Well, thanks, Don. And I'm going to try to contrast similarities and differences between publicly traded corporations and governance of them versus CMHC, which is Canada's largest crown corporation. So another way of thinking about that would be, how do you manage the commercial and business responsibilities of CMHC vis-a-vis the public policy and social license objectives of CMHC? And perhaps the first way to really kind of delve into this issue a little bit is to talk about CMHC directly in terms of how big it is and why is it the nation's largest crown corporation. And it's mainly because the housing market's really big in Canada. The value of all housing is about $4 trillion. So not surprisingly, CMHC, without having to go into a description of it, because I'm sure you're all aware of it, has big exposure. So to put those numbers in context, think about CMHC last year had exposure of $560 billion to mortgages. It has $16 billion worth of equity to support those risks and to immunize the taxpayers from those risks. And that company also earned $1.8 billion in fiscal 2013 for the taxpayers. And that actually shows up in the surpluses deficit numbers for the annual numbers for the federal government. So, so to contrast them, the similarities between a publicly traded company and CMHC are fairly straightforward. Both entities, both types of entities would have a board of directors. They're responsible for CEO succession, for strategy, for budgets, for oversight of operations. Like any other financial institution, they are overseen, CMHC is overseen by OSFI, so it's important that we watch and listen to that relationship very carefully. And we even meet with customers on a regular basis. The board does, as we have board meetings across the nation. So we'll meet with lenders, we'll meet with builders, we'll meet with real estate companies. So in many regards, it's very much the same. And we think about strategy, for example. What products should we be in? What products should we not be in? Which ones do we feel comfortable with our market share or uncomfortable with our market share? How do we feel about the returns for our shareholder, the taxpayer? And we think about risk a lot too, and just like any financial institution does. So the classic example that I worry about is what would happen to CMHC if we had a US-style downturn where housing prices went down by a third? What would be the financial impact to our stakeholders, being the taxpayers? So we really pay attention to risk as much as we do as returns. So then you get into the other side of the equation, which is the social license aspect, the public policy aspect of CMHC. And there are some very fundamental differences. Firstly, unlike a publicly traded company, there's only one shareholder, and that's the Government of Canada. Where in a publicly traded company you may have hundreds or thousands of shareholders, you have one. Consequently, that shareholder has 2 of our 12 board seats, and they are very much focused on public policy objectives as well as the social license aspects of CMHC. So you get into the heart of those issues then would be, I would probably point out 3 or 4. Firstly, it's our job to provide housing policy advice to the Government of Canada. We are the experts in housing and housing policy and housing finance, so we are constantly giving feedback, ideas, thoughts, provoked and unprovoked, to our shareholder. And therefore our board really pays attention to the quality of that relationship as well as the quality of the information. We also are really different from public companies in that we don't try to maximize long-term shareholder value. We do, however, feel it's important to earn a reasonable rate of return on the amount of risks that the taxpayers are taking. So that's fundamentally different. Whereas a bank may try to make a 13, 14, 15, or even higher % return on equity, we do make a good return for the taxpayers, but it's closer to 11%. And we don't focus on trying to maximize it. Another fundamental difference is that we don't try to gain market share or eliminate competitors or buy competitors. Our role is incredibly different. We think about, and this is so key from a public policy standpoint, we think about the safety of the housing system, we think about the efficiency of the housing system, we think about the transparency of the housing system and not only markets but products and pricing. And we also think about ensuring that we have a good choice of providers across the nation, both lenders as well as insurance providers. And I'm going to come back to that in a minute. The last thing I'd mention, though, is that we also have another job which most people aren't aware of, and that is we administer about $2 billion worth of social housing programs on behalf of the federal government, where we provide funds to people in need in Aboriginal communities. And that is a core mandate for CMHC. As part of that, our board really pays attention to that core mandate, and as we do visit communities across the country where we have different board meetings, we tend to visit social housing developments that we financed, and we also meet with chiefs of Aboriginal bands as well. So there are fundamental differences between CMHC and public corporations, and there is a trade-off between commercial business goals and public policy goals. I'll probably close on one quick story, and which may really bring all of this into focus, and that is how would you compare and contrast CMHC's public policy objectives versus Fannie and Freddie's public policy objectives? And how they thought about the world. And of course, Fannie and Freddie was core to the housing meltdown which occurred in the United States in 2007 through 2010, and the enormous value destruction that occurred in the economy for the average taxpayer and average homeowner. And so in the case of, as I mentioned before, in the case of CMHC, we're focused on safety, efficiency, transparency, choice. Fannie and Freddie really focused on two things: maximizing home ownership in the United States, because the government wanted that, and also maximizing profitability. They didn't think as much about risk, I think. And we don't talk about maximizing home ownership or maximizing profitability. And I do ask the question, where was the board of Fannie and Freddie throughout this entire process over the last 20 years as risk kept building and building and building? And it's an incredibly interesting market we're in an interesting time, and I'll leave it at that.